Very good morning to you, and this is my CEO interview on TIP TV. I'm absolutely delighted at long last to be able to pin down Andrew Knott, CEO of Savannah Petroleum, who's agreed to be my victim today. Very good morning to you, Andrew. Welcome to TIP TV.
Good morning, Malky.
I always like to start off with a bit of an overview, so I wondered if you could just give me and the viewers a bit of a rundown of Savannah for us.
Yeah, no problem. So Savannah is a UK listed company. We're listed on AIM. We're focused around West Africa. Our current principal asset sits in Niger, which is where we have under license 50% of the main petroleum basin called the Agadir Rift Basin. We announced last year that we were extending our footprint into northeast Nigeria, but really the focus remains in the near term around Niger and around the work programme that we're about to commence, which is a significant and potentially transformational exploration campaign.
Brilliant. I'll come back to Nigeria later on if I may. Obviously, you've been really busy lately. I know that there's been a lot going on. News flow is beginning to hot up. What's been going on? What's the current state of affairs? Tell us all about it.
Okay, so in terms of the sort of main things, we've just finished a very, very large, over 800 square kilometre 3D seismic survey over our acreage. That complements a very substantial 3D seismic survey that was pre-existing. We will use the data that we now have, and that complements a larger legacy data set as well, to define our well locations and then to start our drilling campaign. We expect to start talking about exactly where we're going to drill over the course of the next couple of months. But we announced last week that we've now signed an agreement with Great Wall Drilling Company, who's the principal contractor in Niger. They've drilled over 250 wells in the basin historically. To start that campaign. And the good news for us in terms of our basin is that the historic exploration success rate is very, very high. So in the recent period, 3/4 of all wells that have been drilled have been successful. And that's across a very, very wide subset. You've had in excess on a pure exploration front of about 125 exploration wells drilled in that period. So we've got a relatively low risk, seismically well-defined project, and we're going to be commencing it over the course of the coming months.
Brilliant. Yeah, you mentioned Great Wall Drilling and the fact they've drilled a lot, and also therefore I can probably bring in CNPC because they're the big player in the area, aren't you? So tell us what about the relationship is and how you came to working with CNPC. And obviously, you know, I heard you saying on a recent interview that working with Great Wall means that it reduces the stress of drilling the wells. So tell us all about the relationship between the
The area that we're in has been subject to oil and gas activity for a long period of time. In the first area, it was done by the majors, so Exxon, Chevron, Conoco, Elf, which is now Total, Petronas. They did drill 25 wells and they made 5 discoveries. At the time, their exploration was based on 2D seismic technology. CNPC came to Agadir in 2008. When they came to, they started preliminary work in 2008, but they actually signed the contracts in the coming year. But the difference that CNPC made is they've used 3D seismic, and they spent a lot of money. We believe they spent between $5 and $7 billion over the course of the past 7 years, so a very large amount of money. So in terms of establishing infrastructure, in terms of establishing logistics, they built a refinery, they built a pipeline, putting all the oil service industry capacity into the country. That's already been done. So to your point, the approach that we've decided to take is to not try to reinvent the wheel. When we acquired our seismic, we used BGP, which is the same contractor as CNPC. And when we do the drilling, we're going to use Great Wall Drilling, which again is the same contractor as CNPC. So we get to benefit from all that historic work that's gone in, and as well from the data set that's been established by that historic work in terms of when we're planning our activity.
So with all this good news around, or news around, what do you say are the near-term catalysts? What have you got coming up? You've announced recent...
So in terms of the main things, we should be providing an update in terms of more detailed, granular, in terms of what the 3D seismic survey has shown for us. We will then also be moving on to then say, okay, so this is exactly the sorts of things that we're looking to drill. We've given some indications, but on a much firmer basis in terms of what those things are that we're going to drill. And then obviously we'll have the drilling campaign itself. And then from a corporate perspective, we've always said that prior to drilling we expect to do something strategic. So we'll wait and see in terms of how that pans out. But certainly that remains on the agenda as well.
Good. Now, there are a lot of barrels of oil here. I mean, you've got something, what you said, 2.2 billion for your share. You've had fantastic 3D seismic. Would you tell me about your chance of success in these wells? I know that you say it won't be one well, or but the chances, the success ratio up till now has been fantastic. What do you think your chances of success are?
So I mean, in terms of the reason, or the reasons that have driven the success rates that you've seen historically in the basin, are that you have very well defined source. Okay, so we believe there's 3 different source rocks that are very, very active in the basin. So the basin's effectively awash with oil. The reservoir rock in the basin historically has been very, very good. So the wells are very, very productive. When you make a discovery, they produce nicely. And then the reason why wells typically don't work is because oil goes into a structure, but that structure is breached and it just goes through it. 3D seismic is really key to working out whether or not a structure has seals or the oil just goes through it. So that's really what drives it. So that's why 3D is, in our view, very, very important for what we're looking to do. So whilst we'll wait until we provide the formal update, I think you can assume that the wells that we're going to be drilling will be low risk from a technical perspective, very low risk from a technical perspective. And that's really the issues which have driven that success rate.
And that sounds great, because not only are they, if this is reasonably low risk, I understand that the economics of the operation are as good as almost anything globally that you could find in this area.
Yeah.
And the costs are lower than and you've always said that the dollars per barrel is a very low number, so the economics look good.
Yeah, so I mean, in Niger, we benefit from, there's some significant advantages on cost, okay? The first is we're in a benign desert environment. What that means is it's very easy to move equipment around the desert, and we don't need a very large civil works imprint, so we're not building roads to get to exploration wells or anything like that. The wells, by and large, are pretty shallow. One of the biggest costs when you drill a well is the depth. And there's no deforestation issues. We're not dealing with any significant weather windows or flooding risks, etc., etc., etc. So what that means is that you end up with a project whose cost structure is comfortably in the lowest 25% globally. And what's been really good is that that's the fundamental sort of capital and operating cost profile. And then the next biggest cost is transportation. And there's been a lot of work done, which we started talking about at the back end of last year, around, instead of relying purely on an export route via the Chad-Cameroon pipeline, there's now the potential to export to northern Nigeria, which is a very significant cost mitigant.
That's good, because obviously the next question I was going to say is, if you are successful, how are you going to export the oil? And there are a number of different options available, aren't there?
Yeah. So again, one of the big advantages that we have in this basin is you have a large company that spent a lot of money and is very, very experienced in delivering these sorts of projects. If you take CNPC, for example, they've completed an average of 2 large pipelines internationally every year for the past decade. Okay, so very, very experienced at these sorts of projects. And then in terms of the optionality that we now have with the progression of not just Chad-Cameroon, but also a pipeline and a trucking option potentially to northern Nigeria, that gives us optionality, and which can only be good for us.
Excellent. Now, obviously, we always want to talk about finances and how. So, it's a reasonably young company. So I know that you've had 1 or 2 financing, various raises over the years. How are you financed at the moment for your ongoing program, and and how's the company been financed in?
So, I mean, in terms of the company to date has been largely equity financed. We've had 2 debt facilities along the way. Firstly, when we were private, we had a $19 million facility at LIBOR plus 6. And then more recently, we've taken on a debt facility which is undrawn. And we wouldn't expect to use it to fund exploration, because conceptually that's not how we believe a business should operate. We did a significant equity raise last year, which was well backed by our existing shareholders. We have a very, very good investor base who have bought in to the story very strongly in terms of both our asset and the potential opportunity in the wider region. And so really, we've been equity funded. We would expect to equity fund exploration. That said, again, I've said consistently that I expect to do something strategic prior to starting to drill, at which point we would bring in a partner potentially. And if we brought in a partner, we'd expect them to fund the forward cost. All these things are value driven. As a company and a board, we're very focused on delivering the best value that we can. And so we'll do what we believe is right at any one point in time to maximise that value. And the good thing about, I think, our company is that management and directors have all got significant equity exposure.
Yeah, I mean, I was going to come on to that because I know that you've got a really solid blue chip shareholder base, most of whom have been with you right from the start, and have been prepared to accept this is a slow burning, really long chance. And you and the directors own, you personally own a big chunk of the stock yourself as well. So
yeah, and we paid for the stock as well.
Yeah, exactly. I think that's really important. I think that's really, really important. You've got 9% of the company, and you bought it yourself, which is good. Just turning to the management team, I know that you really strongly feel that you've got a very strong team, all the way from the chairman through yourself and the other people. Give us a little view on your management team.
Yeah, so if we start off at board level, Steve Jenkins is our chairman. Steve was involved in 3 of the largest undeveloped projects in the North Sea being commercialised, so Kraken, Mariner and the Catcher Light oil field complex, all very significant things for the UK, and that business was sold for about $750 million to Cairn. Prior to that, he actually had quite a strong emerging markets background. He was active in Azerbaijan, active in Yemen, etc., so a lot of experience. David Jameson founded Vitol. Vitol is one of the largest private companies in the world, and it's also the largest oil trading company in the world, so very, very successful. He was involved in founding Sabir and multiple other oil and gas companies that were successful. Mark Iannotti is head of securities at Canaccord, so a very significant amount of equity capital markets experience. And then in terms of the nitty-gritty of the operations team, our VP operations was very senior at Perenco, managed multiple different country units in Africa and lived in Africa for Perenco. Perenco is one of the largest private oil and gas companies in the world. Our head of finance previously was head of finance for BP in North Africa. That's a very significant business unit itself, etc. Our chief geologist has lived and worked in similar environments. So I think we have a team that's fit for purpose and fit for African purpose.
Excellent. Earlier on, and I noticed in your presentation, you talked about expansion into Nigeria, for example, and the question that comes to mind was, why would you want to take the risk now or expand into Nigeria when you've got such a strong position in Niger? It's getting exciting with drilling and everything else. You want to expand the company now. Why is that?
So the geological system that runs is called the Central African Rift System. Okay, it extends from South Sudan into the Doba Basin in Chad, the Bonga Basin in Chad, and then up into Niger. And then there's a continuation that goes into northeast Nigeria. And of all those areas I've mentioned, the area which has seen the least attention by far is northeast Nigeria. Okay, and that's obviously because in comparison, the Niger Delta is a truly world-class petroleum province, etc. So one of the advantages we have is we have a very large data set of the Central African Rift System, specifically the area joining the Nigerian portion. And we were in a very long period of discussions with CNPC and our partner NNDC, the development company of Northern Nigeria, to discuss how we can work together to utilise that. Plus, with the commercialisation opportunity in terms of the Kaduna refinery, being involved in those projects and being involved in discussions around those projects makes a lot of sense for us. So that's really where it is. I don't see a significant capital spend from Savannah in relation to that. In relation to that project, that's not the way we're going. The project is intended to be structured, but both involvement in the pipeline and involvement in
Yeah.
the commercialisation of the
Makes a lot
Northeast
of
proportion,
sense,
and strategically makes a lot of sense. For us.
Excellent. Now, I understand, I've looked at the numbers, but I know that we've talked about earlier on that your share of the Niger oil is 2.2 billion barrels of oil, and you've got a pretty good chance of success. And compared to a market cap of change from £100 million, this means that these shares are way too cheap, doesn't it? I mean, doesn't it mean that if you do the sums, you get to a very restricted. It's not a big gamble on exploration on the stock. So if it has Niger sort of flown under the radar for some reason, it looks like it's a pretty good chance of success for the business.
Well, I think historically, with the nature of our investor base, we haven't felt the need to pump out information and pump out updates as we go along. We've been able to sort of build the business in the time it takes to build the business. I think that you're absolutely right. The way we look at it as a company is that almost any discovery that we make will be very significant and very material for the business. And most importantly, given the nature of the asset where we're targeting these sequential structures, not only is the asset large, it's low cost, but each individual success is very repeatable. And that's really a key message: is you have success here, you'll have success there, you'll have success there, etc., 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 which is one of the main attractions for us when we originally went into the asset.
So just to wrap up, we've done all our time almost, but I just wondered if you could. I always ask people to say, "What's your vision? Over the next few months and a few years, tell us where you'd like to see Savannah Petroleum going."
I'd hope to be in a position where we're announcing a series of discoveries over the course of the coming months. That's obviously in the primary focus of the business today. Secondly, there will be opportunities for us to expand our business, which we'll only do if we view it as value accretive, but I think there are significant opportunities in the current market just now, especially for a company with the backing that we have. And so I hope we'll be a much, much larger oil and gas company, which hopefully is more than reflected in the share price. We don't want to be big for big's sake. We want to be big from a value creation perspective.
Well, that sounds absolutely fantastic. It has been a great pleasure to meet with Andrew Knott, CEO of Savannah Petroleum today. Thank you very much for coming in, and it's been a joy to hear all about the story. Wish you the very best of luck.
Thank you, Malky. Much appreciated.